Good morning. Glad everybody could join us today. My name is Ray Walker. I'm with the Medicare Assistance Program at the Oklahoma Insurance Department, and we're so glad you could make it for this next one of our series of webinars that we're producing. We've done a number of these so far, and I want to remind people, if you didn't get to join us for one of those previous webinars, you can find them on the Oklahoma Insurance Department YouTube page. So we've got those housed out there. If you get an opportunity to go out and watch one of those, I would encourage you to do that. Also wanted to mention we've got a couple more after today's webinar that are coming up. On November 12th, we're going to have Michael Fry from the Attorney General's office joining us, and she and I are going to be discussing how to assist a loved one without going too far. You know, there are a lot of people out there that try very hard to assist their older members of their family, and God bless you if you're doing that. But you also have to know when you may be crossing a legal line, or when you need to get something in place that gives you that option of being able to speak on behalf of a loved one. So we're going to be talking about that, covering some of those issues. And then on November 19th, we're going to have a makeup session. As you know, during the ice storm, we had to cancel the event that we previously had scheduled when we were going to talk about Medicare Part D, the prescription drug plan. So we have rescheduled that event. It's now going to be November 19th at 10 a.m. So we hope you'll join us for that. Just sign up for that one the same way you did this one. But let's go ahead and get started with today's event. I am very excited to have Jose Olivero with us from Social Security. Jose and I have worked together for many, many years now, and I see him at all the same events that we're going to. He works really, really hard to make sure that Oklahomans know what they need to know about Social Security, what their options are, where they can make changes, and what they need to do to maximize their benefits and such. So I would like to turn it over now to Jose. Jose, thanks for joining us.
Well, thank you, Ray. And thank you for inviting me to be part of this webinar today. Social Security, as you will know, have gone through some difficult times here in the past few months, given the pandemic, where all our offices are currently closed to the public. However, all our employees are at home working. We still have access to all the technology, and we continue to take claims over the phone for people who have appointments for retirement, disability, SSI. We continue to assist folks that need replacement Social Security cards. Of course, those documents need to be mailed into the office because as Oklahoma lacks the real ID, we are not able to process those applications without actually having the actual documents in our hands. So that constitutes a bit of an issue. I'd like to, before I forget, make a little comment on what you just talked about, helping family members through this process of applying for Medicare or switching systems online. I want the public to know that our systems are very sensitive to the scams and the number of entities out there who are trying to access individual Social Security numbers and accounts. And so if you're a family member assisting someone to get into the Social Security system, you need to be aware that when you file online, it asks you if you are someone helping another person, and it will ask you for your information so we can verify it. If you try to go around that system, the claim can easily be tagged as a possible scam by our securities system, and then the person will be absolutely blocked from getting their benefits until they actually speak to a person at the Social Security office. So doing it correctly and making sure you don't go beyond the limits of the law and follow the instructions can definitely help and get this done a lot faster. So we'll begin with, as you know, Social Security has been the social system that was established back in 1935 by the Roosevelt administration. Before that time, there was nothing in the United States to help people with retirement. You either work until you died or one of your kids took you in, but there was just simply nothing out there for you. But Social Security changed that, and it has actually changed the way Americans live and reach their retirement age. Today, about 178 million workers are working and paying into Social Security through FICA, through the tax. That constitute about 94% of the population, the working population of the United States. That small 6% are folks who are either self-employed or they work for a system that have their own retirement program, like some teachers systems, police departments, county offices. They have their own retirement, so they do not pay into Social Security. Now, paying into Social Security is not an individual option. If your employer decides that that's what your employees want to do, there's a process for that, and it cannot be just one person or two people in the system that don't pay. You have to be the entire group of people within that system. So what we have is, as of December 2019, as you can see by here, 45.1 million retired workers are receiving benefits from us each and every month. That constitutes $67.8 billion of Social Security funds going out there each and every month to retired workers. And in addition to that, we have another 3.1 million dependents, spouses and dependent children of retired workers who receive an additional $2.4 billion a month in Social Security benefits. In Oklahoma, I'm sorry this chart didn't quite show up well, but what we have as of the end of 2019, we had 802,326 people in Oklahoma that are receiving benefits from Social Security. Now, if you think about that, a population of 3.7 million, I think, is what Oklahoma has now. Almost one out of every four Oklahomans are receiving benefits from Social Security. That's over $1 billion a month coming in to the Oklahoma economy every month through Social Security. And as you well know, the times where people cashed their checks and took their cash and put them in a coffee container and buried in the backyard are long gone. This is money that is going straight out into the economy, either to pay for medications or insurance, rent. This is a program that means a lot to the people of Oklahoma as well as the United States. Now, in 1935, when we began, Social Security was designed to be the foundation of your retirement. It was never meant to be everything or to provide 100% of what you needed to retire. So, in addition to the Social Security benefit, you need to have some additional things like pensions, perhaps a retirement from your work, where you work, your company, some savings and investments, maybe 401ks and other investments like rental properties and that sort of thing, and perhaps some other income from stocks and bonds, or like I said, retirement, post-retirement benefits like rental properties, or maybe you may want to do some work, part-time work somewhere. So the question comes, how do I qualify for retirement benefits under Social Security? Well, the bottom line is that you need 40 credits. And you may have heard that before. So what exactly is a credit? Well, a credit is a 3-month period of time during the year, consecutive 3 months, that you earn at least $1,470 gross income. So you can attain up to 4 credits a year because there are 4 quarters, 4 sets of 3 months. and you get credit as the time progresses throughout the year. So as soon as you earn $5,880, that will be for 2021. For this year, with $5,760, you have earned enough monies to earn you the 4 credits for the year. So once again, you need 40 credits, and what that physically translates to is 10 years of work. Now, the 10 years do not have to be consecutive. We have babies, we go to school, we deploy in the military. There's a number of things that happen. We spend some unemployed time. And this money, of course, to Social Security comes only for employment tax. This has nothing to do with your federal, state, county, or city taxes. This is wages, money, taxes from your wages. So because of that, as long as you have 10 years of work, not necessarily consecutive, credits into Social Security, you have enough there to get a minimum retirement benefit at age 62. Now, how do we determine how much money you will get? Well, perhaps you recall, those of us who are a little bit mature, we used to get a letter in the mail from Social Security every year. That letter is known as the earnings statements. It tells you about your earnings over the years. Now, a few years back, we decided to go ahead and put those things online by you accessing a My Social Security account, which we'll talk about that in just a moment. You can get that information. But the bottom line was that we were mailing these things out, and it cost about $70 million a year to get it out, and a lot of people were not really using it. So we put it online at no cost to the taxpayer, because our job is also to be good stewards of your money. So once again, we're going to take your earnings statement, that list of monies that you have earned over the years, and we are going to bring all that money to today's value. In other words, we're going to adjust it for inflation, because we know monies that you had made in the 60s to 70s have a lot more value today. So we're going to bring it to today's value. Then we are going to look at all that time, and we're going to take the top 35 years of your earnings. We're going to average that out, and that will give you what is called the average index monthly earnings. In other words, the average money that you receive over those 35 years per month. Now, that is the number that we're going to plug into the computation to determine how much money Social Security will send you when you retire. Now, so for instance, if you have worked, let's say 40 years, we're going to bring that money to today's value. We're going to take the top 35. We're going to drop the bottom 5, and that will put you somewhere up here. But let's say you only work for 20 years on the Social Security. Well, the laws still require us to use 35 years, which means we're going to use 15 years with 0 earnings as part of that average. Therefore, instead of being up here, your average will be down here. You're going to get less money. So it's essential that you make sure that those statements are correct, and if there's some wages that are earned that are missing, that you contact Social Security, because we're going to need the evidence, your W-2s, or at least some information as to where to get them, so we can give you full credit for that. Now, the IRS doesn't send us that. Your employer sends it to us at Social Security. So it's essential that you understand that we don't arbitrarily add or subtract. It's simply what your employer sends to Social Security. So the next question is, when should I retire? Well, we don't know, because every individual has their own situation. So basically what we have done here in this slide is giving you a general idea of what the benefit would look like depending on your age. Now, Social Security.
Yeah.
Can you see me? I hope so.
Okay,
Social Security.
I'm going to mess with it, see what happens. Let me know if you see any changes. Okay, bye.
May I continue?
Hey, Jose, it's Ray. We're working on trying to adjust the slides. They appear to be a little bit dark, and so it's kind of hard for people to read the numbers. So if Celia's doing a little poking around trying to see if she can fix that, I think you can go ahead and keep going, though.
Okay. So here you have a general idea of what the Social Security benefit will change over the period of time. So back in 1983, the Social Security system was changed to add additional benefits to people who wait past their full retirement age. The full retirement age basically is a date set by Congress, which I will show you in just a moment, that basically the law says that once you reach that age, you become full retirement age. From there forward, whether you are working or not, we will consider you fully retired for Social Security benefits purposes. If you retire before that full retirement age, well, what's going to happen, instead of you getting 100% of what you were supposed to get, we are going to pay you less. And we're going to pay you less, obviously, because you're going to be collecting for a longer period of time. But if you decide to wait to receive your benefit past your full retirement age, we're going to give you additional credits to allow you to earn more money down the road. So this chart shows a person whose full retirement age is 66. Now, that age is not the same for everybody. I will be showing you in just a moment based on the year you were born. But let's say you were born in the time where age 66 was the full retirement age, and you were about to get $1,000 of Social Security benefits. As you can see in the left corner of the chart, if you decide to take your early retirement and start your Social Security at 62, which is the earliest that you can receive your retirement benefit, instead of getting $1,000 a month, you will be getting $750 a month. That is a 25% drop in the amount of benefit that you will get. And that is a permanent reduction. So even if you live to be 100 years old, you will not receive any greater amount other than maybe a cost of living allowance. So that sets your amount. But let's say that you wait later than your full retirement age, and the furthest that you can wait up to is age 70. Past age 70, there is no additional benefits. So instead of getting $1,000 at 66, you will be getting $1,320 at age 70. What I'd like to point out to you is the difference between 62 and 70. As you can see there, it's almost a 73% increase between 62 and 70 in your Social Security benefit. So basically what I'm trying to say is that the longer you wait, the higher the benefit. Even if you stop working past your full retirement age, the longer you wait, it's a time factor, the greater the benefit that you will be receiving from Social Security. So here is your full retirement age. As you can see in the far left, it tells you the year you were born and your full retirement age. The next two columns, what points out is that if you decide to retire early at 62, as you can see for people who are 66, as I mentioned, you lose 25% of the benefit that you would normally get. Once again, a permanent reduction. And if you have a spouse that was eligible for benefits under your Social Security, he or she, if you start at 62, loses up to 30% of the benefit that they would get. And remember, there will be 30% of the reduced amount that you already have. So it makes a big, big difference. Down on the bottom, if you were born after 1960, the full retirement age is 67, you lose 30%, and your spouse 35% of that benefit. Now, the best way to make sure that you understand what those numbers mean to you is to open a My Social Security account. If you go to our website, www.socialsecurity.gov, in the page, bottom left side, you see My Social Security Account. This would allow you to open an account with Social Security. It's a completely secure system that would allow you to see the information that otherwise you have seen in those letters that we used to mail out. It tells you, double check your name, your date of birth, make sure those are correct. That you, for instance, it will show you the year that you work, how much you were paid, how much of that money went into Social Security tax, and how much is going into Medicare tax. It will show you the amount of benefits that you can get at 62, at your full retirement age, and it will show you when that age is and how much you can get at the age of 70. And it will also go on to tell you about the possible benefits for a spouse, and if you were to pass, how much your beneficiaries, your spouse and minor children, can get from Social Security. The retirement calculator would also allow you to do up to 3 scenarios at the time. So you can put in that you're going to retire 64 in 3 months, and it will give you the amount of benefit that you will get on that based on your earnings, which is a big thing. It's a big deal. It can really help you plan for your retirement. It also has your earnings test to show you how much you can still work and receive your benefit. I talk to you about life expectancy. So it's a really very important place that you can go visit. There's a lot of stuff that you can do there. Now, many people ask us, if I retire, can I still work and make some money? The answer is definitely yes. However, there are some limits if you are going to retire before your full retirement age. As I mentioned before, once you get to your full retirement age, there is no limits as to how much you can work and earn as far as Social Security is concerned, and there will be no offset to your check. But let's say you begin at 62. So from age 62 until January the 1st of the year that you turn full retirement age, the limit for 2021 is $18,960 a year, which is about $1,580 a month. If you go and earn above that, then we're going to offset your check 2 for 1. So for every $2 that you earn above the $18,960, we will take back $1 Social Security benefits. Once again, that restriction goes from age 62 until January the 1st of the year that you turn full retirement age. Now, once you get to the 1st of January of the year that you turn full retirement age, the earnings limits jump to $50,020 a year. That is for the period of time from January onto the first day of the month that you turn full retirement age. So let's say your birthday is in June the 15th. That limit only covers you through the end of May. June the 1st, we consider your full retirement age. So, which means from January to May, you can earn up to $50,000 and there will be no offset in your check. If you go over that, then we're going to offset 3 for 1. So for every $3 that you make over the $50,020, we will take back $1 of Social Security benefits. Now, many people ask us about, do I have to pay taxes on my Social Security? Well, here's a government answer for you. Maybe. Taxation is an IRS issue. Social Security doesn't get involved on that. So this chart kind of help you understand a little bit of what that is like. And so I will take an example of a couple filing a joint return. And this is all based on your 1040s. So whatever you file your taxes in your 1040, this is what the IRS is going to be looking at in terms of taxation. So they're going to look, as I said, in 1040, they're going to look at your entire income, work, Social Security, casino earnings, whatever you got monies from, or lottery tickets that you won, all that stuff that is in 1040, that's what they're going to look at. And if you and your spouse have a combined income of less than $32,000, then you have no tax liability on your Social Security check. However, if you and your spouse together are making somewhere between $32,000 and $44,000 of income during the year, up to half of your Social Security benefit is taxable. And if you and your spouse as a combined household earn over $44,000, up to 85% of your Social Security may be taxed. That's not your tax percentage, but just the amount of your benefit. 85% of your benefit could be taxable. So once again, this has to do with your 1040s. And if you have any questions about that, you can always check with the IRS and their website. This hasn't changed in a number of years, but you never know. So we'll get to the portion about Medicare. Medicare, back in the day when it was instituted back in 1965, Social Security and Medicare were branches of the Department of Health. That has since changed, and Social Security has become an independent agency, and Medicare, of course, is run by the Center of Medicare and Medicare Services, is a separate entity. So we all split. However, Social Security has retained one aspect of the Medicare part, which is enrollment. So Medicare, has basically three parts: the original Medicare or the hospital insurance, Part A, and this part of Medicare is at no additional cost to you if you're eligible for Social Security, because you have paid that over your lifetime. And basically, that is the portion that pays some of the cost when you're hospitalized. The Part B of Medicare, known as the medical insurance of Medicare, also is sort of subsidized by the government, but you have a share cost currently of $144.30. The numbers for 2021 have not been released yet, so I cannot give you that, but this is, as of this moment, $144.30 per person per month. Then you have prescription programs, Part D Medicare, and those are also subsidized by the government, and you get to choose. Oklahoma, I think, right now has about 30 programs. I think Ray can best talk about that. And they run in prices based on the kind of medications you're taking, and how often, and how costly those things are. And we are coming now, we're in the process of enrollment, open enrollment for those plans. So it's essential that if you get informed by either calling Medicare itself or checking with our SHIP program, MAPS in Oklahoma, and they will be more than happy to help you with that. Once again, as far as Social Security is concerned, our portion is to get you enrolled. And what does that mean? Well, if you are receiving a benefit check from Social Security, when you turn 65, I'm sorry, this slide didn't come up, so you're just going to have to imagine. So if you are receiving a benefit from Social Security when you turn 65, Social Security will automatically enroll you in Part A and B of Medicare. And we will send you some documentations about Part B. Now, if you get to the age of 65 and you are not enrolled in Social Security, then there's some actions that you have to take, and I think this one work. All right, it doesn't. So there's some things that you have to do. So you have a 7-month window around your 65th birthday. 3 months before your month of birth, your month of birth, and 3 months after your month of birth. And basically, your initial enrollment runs till the 7 months rather. So if you sign up during the first 3 months before your month of birth, your coverage for Medicare starts on the first day of the month of your birth. As you can see, if you then enroll during the month of birth, then the coverage begins the next month. Let's say you enroll on the first month after your birth, then you have a 2-month waiting period, and it won't kick in until 3 months after. If you sign up on the second month after your month of birth, now you have a 3-month wait, and it won't kick until the 5th month after your birth. And if you went into the 3 months after your month of birth, you will have to wait until month 6 after your month of birth. So what you're looking at here is a big delay on signing up, actually getting your benefits. Now, if for some reason you are not receiving any benefits from cash benefits from Social Security, you turn 65, you still have some options. If you are working and cover through your spouse work or from your own work, as long as one of you guys is working and you cover through that group health insurance, we will give you what is called a special enrollment period. This would allow you to go ahead and sign up for Part A of Medicare, and delay signing up for Medicare Part B until the time when you're ready to lose that cover through your work, whether you're going to leave your job or you decide that you want to have it or you're going to lose that group health insurance. That is a special enrollment period, and that will require for you to fill out some paperwork and have your employer sign some documents and send it to us certifying that, in fact, you had group health coverage from age 65 on until the time that you decide to take it. That's called a special enrollment period. However, if you miss your initial enrollment and you do not have entitlement to a special enrollment period, you will have to wait until what is called a general enrollment period. The general enrollment is normally runs from January the 1st until March the 31st every year, but your health care doesn't begin until July. And what that means is that if for some reason you delay, you forgot, you don't have, you can get with us on this and find out, and you miss that initial enrollment and you don't have entitlement to a special enrollment, you could be without Medicare for a good year or more. So it's essential that as you reach that age of 65, that you pay attention to all that stuff that you're getting in the mail. It's companies that are trying to get your business. That should be a hint that you perhaps should go to either socialsecurity.gov or medicare.gov and kind of get informed as to what's going on, because if you miss that, as I said before, if you miss those windows, there's some consequences to that could affect you and your family. Now, many people think that, if I retire, my spouse can get 50% of my Social Security. And that has been a story that has gone on. But that's a bit of a misnomer. A spouse can receive up to 50% of the amount that is received by the higher wage earner. So whoever earns the more money. Now, this will be reduced if you or your spouse retire before the full retirement age. Just like everyone else, if you retire early, you're going to lose money. Now, this is a combined benefit. Okay? It's a combined benefit. And what that means is that we are required to look at the earnings of both spouses. So let's say, as an example, that I'm going to retire today at 66, which might be my full retirement age, and I'm going to get $1,000 from Social Security. Well, if I do so, and my spouse is also full retirement age, she could be entitled to as much as $500 under my Social Security. However, as I mentioned before, this is a combined benefit. In 2016, Congress changed some of the laws concerning Social Security spouses' benefits. Before that, there was a point where a spouse could just take my spouse could take her half of mine at full retirement age and let her own Social Security grow to a higher benefit. That law was changed back 4 years ago in 2016, as I mentioned. So now it's a combined benefit. When you apply for benefits, you are required by law to apply to all benefits that you're entitled to. In other words, my wife cannot simply apply for my benefit. She had to first apply for her own benefit. And then we will make a computation to decide whether or not she can receive some benefits. So let's say, for example, and this doesn't only apply for present spouse, former spouses might be able to receive some benefits as well. When we talk about benefits to divorced spouses, they can be eligible for benefits as well. Now, there's some rules to former spouses. Number one, they have to be single, and they must have been married to me at least 10 consecutive years. So at least 10 years of marriage and must still be single. If she remarries, then she loses all benefits. She will have to apply in her new spouse's benefits. So, and she, of course, has to be at least 62. For divorced spouses, I don't have to be collecting. She can be collecting as an independent spouse. But those are kind of a tricky situations, and we will have to kind of look at those one-on-one situations. So let's say, for instance, that I have had 3 marriages. Let's say I'm currently married, and I have 2 former spouses that were married to me at least 10 years, and they're all still single. So Social Security will then look at me, and like I said, I'm going to get $1,000. So technically speaking, my present spouse that may have been only married 2 years, because the restriction of the 10 years do not apply to the present spouse. Okay? So my present spouse qualified, and I have 2 former spouses that may also qualify for benefits, each one of them to a maximum of $500 based on my $1,000. And then Social Security will look at this. So let's say my first spouse, we were married 10 years. We're divorced. She's single. And she applied for the benefits. She has to apply for her own. She did some work. And she's full retirement age, to make the math easy. So full retirement age, she's technically entitled to $500 under my account. So when she applies, and it turns out that she's entitled to $300 under her own Social Security. So she has to apply for that. She gets her $300, and then Social Security will go ahead and add $200 from my account, and she will then have $500 a month. Now, bear in mind that any monies that are paid to a spouse, former spouse, or children will have no effect on the benefit that I'm going to get. So my $1,000 is my $1,000 irregardless. So let's look at my second spouse. Well, she worked, and she's earning $700 of Social Security benefits on her own. Because $700 is a higher benefit than the $500 combined, she will receive no benefit under my Social Security because she's already making more on her own. Now, my present spouse, well, we got married, she stayed home raising the children, and didn't work outside the home. Well, she's full retirement age, she's currently married to me, she's entitled to the entire $500, which means at the end of the day, I will continue to get my full $1,000. My present spouse get her $500. My second spouse will get nothing, and my first spouse get $200, and we will live happily ever after. So this is, in a nutshell, how that works. In addition to spouses, minor children may be able to receive benefits under my Social Security once I retire or if I become disabled. So the children have to be under age 18 and unmarried, or between 18 and 19 we will continue to pay if the child is still unmarried and attending full-time high school. Okay? We don't pay for VOTEX and colleges and that sort of thing. So we will pay until the child turns 19 or finish high school, whichever one is first. The exception to that is if I have a child of any age today, 30, 40 years old, who became disabled before the child turned 22, that child may also be entitled to benefits under my Social Security. And the purpose of that is, of course, if you have a child that is born with a disability, Social Security will be able to provide benefits for this child for as long as the child lives, or until the situation or her disability, his or her disability improves. But this is one of the big things about Social Security, that we will make every effort to take care of your family, even when you're no longer with them. The exception, the survivor's benefit pretty much work the same way. The only difference for survivor's benefits is that the widow or widower, instead of waiting to 62 to receive his or her benefit, may also apply for the deceased spouse benefit at age 60 and retire on the spouse's number at age 60. And we might even be able to pay disability benefits if my surviving spouse becomes disabled between the ages 50 and 60 years of age. So this is a big benefit, and we pay a much higher benefit to widow and widowers than, we pay to spouses. Also, if I pass away and my wife is at home taking care of a child that is under the age of 16, regardless of the age of my spouse, she could be 30, and she's taking care of this child under the age of 16, she can start receiving widow's benefit until the child turns 16, and then the benefit will all go to the child, and she will, later on when she turns 60, she can apply for my benefit as well. So what you look at here is, as I mentioned, if I pass, my spouse, if she waits until her full retirement age, she can get 100% of the benefit that I would have gotten at my full retirement age. If she applies for the benefit as early as 60, which is the earliest as a widower can apply, she can get 71.5% of what I normally would have gotten. Now remember, that is a big difference between my living spouse. When we retire at 62, she can only get maybe 35% versus 71.5% if I pass. Now, we can also pay some benefits to parents if you are providing at least one half of the support for your parents, financial support, and you pass away, they could be considered your dependents. And of course, there's that $255 lump sum death payment, which is the benefit that we can pay to a surviving spouse or children of someone. It's a one single payment of $255. What I've done here, I put side by side what the benefit would be for a full retirement age spouse, 50% or less, versus a widow or widower, and what the benefit would be if the husband or wife passes away. So there's a couple of things that we like to address before we come to the conclusion of this presentation. And of course, one of it is the elephant in the room. And you hear comments from people saying, well, Social Security is going broke, why should I pay? Well, that's not necessarily true. Currently, we have $3.1 trillion in benefits that are in the trust fund. That's money that's being set aside to pay for benefits. In addition to that, of course, we have the taxes that we receive every payday from people who are those millions of Americans that continue to work and paying into Social Security. Now, that, of course, is trouble. As you perhaps recall, recently the administration has said they suspended the collection of Social Security taxes out of employers' paychecks. Now, granted, not every employer has decided to do that. The majority have said no, because the caveat to that was that you don't have to pay in October, November, and December, but then you have to pay it back before April of next year. So, you can get the money now, but you're going to have to pay for it later. So a lot of employers said no. So where does that leave us? As of 2034, at the end of 2034, we predict that the trust fund will be completely gone. What that means is that we're only going to have your tax money, the tax revenue to pay the benefit. And what that translates to is about 80% of what you have been promised. So if I was supposed to receive a $1,000 check, I will receive that in December of 34, but 2035 in January, I will only get $800. So the question is, what is Social Security planning to do about this? Well, unfortunately, that's not what we do. We have no way of changing or to do affect any changes in the law. This is a job for Congress. And in all honesty, in the past 81 years, we had faced similar situations about 14 times where the trust fund was needing some kind of work to be done to make the Social Security funds stable and to continue to pay the benefits that you were promised and, in fact, that you had paid for. Because, as you know, this is not a welfare money. This is an entitlement, and you're entitled to it because you pay for it. So it is essential that you, as a citizen, continue to make your elected officials aware that you're paying attention to this and that you need this check. We're all counting on it for retirement. And one of the things that the little chart that didn't show up about Oklahoma is that of the 800,000 plus Oklahomans that are receiving benefits from Social Security, nearly 70% of them are people over 65. So these people are truly in a fixed income, and they have no way of adding that 20% that will be missing from their checks. So what I encourage you is to continue to talk to your elected officials, call, email, write a note to your elected officials, and asking them what are they planning to do about Social Security. Tell them about your situations and make them aware that this is an issue that, in fact, is important for those 800,000 Oklahomans that are receiving benefits every month. So the next thing is about fraud. Well, I will tell you that every month we've been receiving about 35,000 calls from individuals who have received emails, texts, or even phone calls telling them that their Social Security has been compromised, that they have arrest warrants, that the police is on their way to get you. All I have to say is we're not a law enforcement agency. If the police is coming to get you, we wouldn't know about it. And we certainly would not be calling you at home about any issue whatsoever. If Social Security has something to tell you, we will send you an official letter asking you to call us back. I'm giving you one of our 800 numbers where you can call us and so we can discuss your situation. And normally this will be discussions about items that you already contacted us about, whether you're having problems with your direct deposit or anything else like that. I can assure you that Social Security do not call people out of the blue to ask them, and we certainly will not ask you for money because we're the ones who give it. We would not ask you to give us any cards or send us any money or tell you that anybody's coming to arrest you. We wouldn't know. If somebody was on the way to arrest me right now, Social Security wouldn't know. So it's essential that you understand that 1 out of 10 people have lost money in 2019, and that's conservative estimate is $667 million. And please help us get this word out to your circle of influence, your families, and so on, because a lot of these monies are small, relatively small amount, under $1,000, $2,000. And what you have elderly people that are lose that money, and they're afraid to convey this information to their children. They're afraid that the children will say, well, mom can't take care of her own business anymore, or, something like that, or I have to manage. Our seniors want to continue to live independent lives, and we need to help them understand that, they're victims of a crime, not different that if somebody has stolen their cars. So it's essential that we get the information out to our circle of influence, whether you're participating in a church activity or your friends, bingo, whatever you go, let them know. Social Security don't call anybody unless you call us. And of course, this is a crime, and you can call us, but there's absolutely nothing we can do. We're not a law enforcement agency. So this is a picture of what our website looks like. My Social Security is down here in the bottom line. This is where you can open your Social Security account. And as you can see, the panels are pretty large, where you can learn about retirement, disability, Social Security cards. What you have here in the bottom right corner, it says FAQ. That's your questions. What we have done with that is that we have put in the top 400 questions that we receive through the internet or that people call the 800 number for. So if you have a question, it's more likely than not that the answer is already posted in there, but you're almost always welcome to call our 800 number, 1-800-772-1213. Please understand that at this point, Social Security is doing all the interviewing by phone. So the phones are pretty busy. I live here in the Moore area. Our office only has 35 employees, and we've been receiving as much as 700 calls a day. And this is calls that are coming in. In addition, our employees are doing what they do. They still have to be taking claims over the phone, disability, retirement, SSI, and that sort of thing. So be patient with us. Like I said, you can always, we recommend that you go into the website and try to see if your question is already there. And we are always ready to try to help you out. So at this point, if we have any questions from the audience, Ray, I give this back to you.
All right. Thanks, Jose. That was great. We did actually have a few questions. The first one you may have touched on, but just in case somebody might have missed that answer, the question was asked, can I collect my deceased spouse's Social Security and my own at the same time?
The answer to that is no. You can get one or the other.
Okay.
Whichever one is the larger.
Okay. Cut and dry.
A caveat to that is that, as you saw in the presentation, traditionally, the spouse's benefit is much higher than what you would get on your own anyway. So it is a rare instance where a widow or widower can receive more money in their own than on the spouse's benefit.
Okay. Can multiple ex-spouses collect Social Security?
Sure, the more the merrier. For instance, in my example where I had two former spouses and I'm currently married, all three could technically get benefits.
Okay. All right. Now the next one's a little bit deeper. An individual had asked, does it help to factor in the tax rate and the net amount they will earn? And we asked for some more information, and they identified that they were referring to the calculator on the Social Security website. Can they put in their tax rate and calculate their net monthly earnings?
Okay, so remember that you pay you don't pay Social Security tax on your entire income. If you look at your W-2, line 1 and 2, it shows you how much you fully earned that year from your work. The next line, 3 and 4, shows you Social Security tax and Medicare tax. What's the difference? Well, if you have a 401k, that is, you don't pay taxes on that. No Social Security, Medicare taxes. So you could see that your net income could be higher than your Social Security income or lower than your Social Security income based on a number of factors. So based on that Social Security income, that's what the number that we are going to use to determine your Social Security benefit. So if once you go into the estimator, and if you think that next year, for instance, you're going to earn more, the estimator would allow you to put that amount. So yes, you can, but it's a little complicated. You have to go in there and change the numbers because the estimator will assume that you're going to be making about the same money for the next 4 or 5 years.
Okay. All right. Thanks. Next question. And this may be a two-parter. In terms of actually enrolling, whether we're talking about for Social Security or for Medicare, both are done through Social Security. Can you do that completely online, or is there a point at which you have to go into an office? What's the process?
So as I mentioned before, if you apply for Social Security before you turn 65, we will automatically enroll you in Medicare A and B. So you don't have to do anything. Okay? Now, if you get to 65 and you don't want your cash benefit, you only want Medicare, yes, you can do that online just like the other way around.
Okay, how about getting your Social Security benefit started?
You can get it all in line. And the application for your Social Security benefit, we timed it. It will take maybe 12 minutes to do online. And of course, you're not retiring yourself. You're applying, you're sending it in. One of our technicians will get it within a day or two, and we'll process it. If everything looks good to go, we will send you a letter saying, congratulations, Ray, you are now retired. And this is how much you're going to get starting this date to the account that you gave us.
Okay. All right. Well, thanks again, Jose, for joining us today. That was very informative, and I hope people got a lot out of it. Wanted to remind everybody that's joined us that we do have a couple more of these webinars coming up. Next week on November 12th, we'll be talking with Michael Fry about the legal things you need to be aware of if you're assisting a loved one. What are the documents you might need to put in place so that you can do that and not be violating the law. And also on November 19th is going to be our makeup session where we're going to talk about the Part D prescription drug plans. And Gay Humphrey from CMS will be joining us for that event. So again, we want to thank you for joining us. These are very different times, and we realize that we're having to do some workarounds to do the education that we would normally do face-to-face. So we're glad that you joined us. Please spread the word about these events. If you know of someone that might benefit from one of our future webinars, please make them aware of that. And thanks again for joining us.